The website, it looked really interesting, and the stories that were written on the homepage, so it was very interesting. I was wondering if you were the one who wrote the website, because
I wrote every line in that.
Wow, that's very impressive.
From A to Z, including the content of the courses.
Amazing.
Thank you. It's really like adding up everything I did in my life. Finally, it's coming together. It's, I will say a few words until people will join us. My life wasn't really in a regular way, and I was lucky enough to get the education I got. And then I was doing a lot of projects all over the world. And when I got to Africa, it really touched me big time. And I said, you know, there's a lot to be done, but there's nothing better to do in this world better than education. So I said, okay, let's put everything together. And it was much before the corona or all those stuff. And here is the idea, is to make learning as fun. Learning by simulation, you will see. You are the second round that I'm going to teach this course, totally different from last year. I just finished a course in Ivory Coast. My partner in Ivory Coast have taught it in French. He was translating to French. We already translated all the material to French. Next time he's going to teach it. And he will record himself, and then we'll have a recording in French. Simultaneously, there's another guy translating everything to Arabic, and he's going to record it in Arabic. He was also my student. So it's really fun. I think it will be a lot of fun. I was asked to build up a program for youth in Uganda. Okay, so first of all, hi to everyone. This course, many places teaches for like 12 sessions. Some places it teaches like 6 sessions. You have only 4. Not only that, you study accounting, I know with Professor Shaw, and I know the book you used, excellent book. I think it's one of the few that doesn't use debit and credit to teach you accounting. And I love it, and it's the right way to teach it, really. But still, you didn't touch statement of cash flow. Correct me if I'm wrong, because that's what I know from previous years. Have you got to statement of cash flow?
No, we're not yet.
Exactly. So my challenge seems like almost impossible, and I'll be straightforward with you. One, you don't know really statement of cash flow, which should take at least a session. Then we're going to study financial statement analysis for two and a half sessions. And then I always love to finish when I talk about valuation, because you know, you don't have a course in valuation, okay? So I always add something. And this time, I feel the first time really comfortable that we can tackle this challenge easily due to some change in the way I'm going to teach the course. And I already have done it, as I said, in Ivory Coast, works beautifully. I developed a special component. I will close this screen now. When you go to the courses, I logged in as a student, by the way. And as a student, I go to this course. Here you have a simulation. I will talk about it toward the end of the semester. I mean, the third or fourth session. For now, we just go here and we have all the material, okay? I click here and we go to the first session. You're more than welcome to go and read the introductions, and I strongly recommend you do, okay? Just a few sentences. Then look at the basic financial statement. You already know, balance sheet, income statement. And this one, statement of cash flow, you did not study, which I'm going to.
Sorry, could you show again how you got to that screen?
Yeah, definitely. Who is it? Just say your name so I know at least your name.
Oh, sorry, my name is Yossi Tager. I thought you, like, my camera would pop up, but fine. Yossi,
okay.
Anyway.
Okay, Yossi. I will do it again.
Thanks.
One more. This is the main website, academycity.org. By the way, if you type here, Dr. Baranes, you get the same website, okay? So this is really just also my website. Let me go back so I don't have to log out. It does distinguish it as two different domains. So here I'm already logged in. Okay. After you do academycity.org, you get the main screen, and then you go to courses. By the way, just really aside, apologize. You will learn about me. I have a tendency to go all over the places. Feel free to stop me when I do that, but I have that tendency. If you go to my account, there is a function here. I'm looking for someone brave if he has the ability to follow every click a student does. I don't know if you studied the machine learning or analysis. I was wondering if anyone wants to take the challenge and to know how to analyze the behavior of the student. That's just a side comment, okay? So basically, you won't really need my account in your case, unless you're taking several courses and you want to manage them. But I just opened that up. In the next year or two, we will definitely get into that one. Okay, for the main one, I got to the courses, go to businesses, that's where your course is, and that's the first one. It's financial statement analysis and valuation, I called it. Really formally for you, it's financial statement analysis. Okay, in this course, it opens up automatically on the topics of the courses. And here, in fact, you have all my recording. So I strongly recommend really go over it. This one is a summary of all the accounting that I'm going to go over today, plus financial statement analysis. It's only 1.5 hours recording. I'm recording again now. So if I feel that the recording today is better than the original one, I will put the recording from today. Okay? So what we're going to do today and what we're going to do the whole semester, we have 4 topics. First one is catching up, and I'm going to start right here. This one I leave you to read a little bit. And I'm going to go into the first one. It's a review of financial statement. I developed a special component. I hope you will like it. All the stuff you studied in accounting in one component from A to Z. So we will do a review of all your accounting. At the same time, we will see how statement of cash flow that you haven't learned, it's being composed automatically by this component. And that's immediate. If I were to make an exam and I were to ask you, is there any input that you have to do in statement of cash flow? The answer, what happened? Everybody hear me? Hello?
Yes, we can.
Yes,
Yes.
okay. Something
He's
went
American, Yanni.
Yeah, something went kind of way.
Yes.
Okay, good. So if I were to ask you an exam, okay, type of a question, is there any data entry in statement of cash flow? The answer is definitely no. You can immediately see it's from here. There's only data entry here in the balance sheet. There's only in the income statement and none in the statement of cash flow, meaning that the statement of cash flow derived automatically from those two, I would say 80% to 90% from changes in the balance sheet. One more time, statement of cash flow is nothing but a difference between balance sheet beginning of the year to the balance sheet in the end of the year and reclassifying the accounts according to some stuff that we would like to gain by organizing the information as a statement of cash flow. That's really summarizing what is the statement of cash flow on the technical part. We'll get into the economics and the finance meaning of it. But basically, this is summarizing all your accounting course plus statement of cash flow. So that's what we'll do today. Then next time, we talk about financial statement analysis. There is 2 types, vertical and horizontal analysis. There is those 2 for the balance sheet and those 2 for the income statement, okay? After we finish that one, the following session will be ratio analysis, very popular in financial statement analysis. And finally, I added relative valuation, and I will talk about the different method of valuation toward the end of the last session. But why this one come right after ratio analysis? We use some stuff we learn in ratio analysis, how to do valuation of a companies using relative valuation, and that will be the end of the course. Questions so far about the structure? I haven't talked about the requirement. I will talk about it in a second. But so far, what to expect from the course? If anybody has a question, you're more than welcome. Clear? Beautiful. So let's start. Here we go. I'm closing here and leaving it. By the way, if you speak Arabic, you can click Arabic here and you get the whole things in Arabic. I finally figured out how to make it nicely on the right side. So if you go here, you have it in Arabic. There's some word didn't translate. I don't know why. I'm working on it. But basically everything is also in Arabic, which is beautiful. It's right to left. It's quite a challenge. But anyway, let's go back to English. I don't really know. I don't speak Arabic, although I do understand. And let's go back to our session today, which is the—
Sorry, another question. This is Yossi speaking.
Go ahead.
I wanted to ask regarding the final grade because the syllabus.
Yeah, I'm going to talk about
very...
the requirement in a second.
Okay.
About the requirement. Yeah.
All right.
Okay. Before that, to help you, we're going to go over this one. I made a little nice one, take a test. So I filled it up by some questions and just for you, reviewing the material. Many questions, I post them in such a way that you learn from the question itself. So, and the nice thing is that as you answer a question, you get immediate response. So even without reading, if I think this is the right answer, I tell me it's wrong. I think this one is the right one. Yeah, it is the right one. So it's adding my grade. So 1 out of 1, it's 100. 1 out of, I don't know how many there are. So it will give me. Then you continue. Many questions, many times is all the answers are correct just to help you to learn the material better. So it's really for you to review. This is wrong answer, correct answer. So this is the right answer. That's a really good way to learn immediate response. Okay?
Yes, shukran.
Say again?
Maybe you can turn everyone else's mics off. I think some people left their mics on.
So if you can turn it off, I can, you know what, I can close it myself and you still can talk, okay? So I will hear you. So that will be easier. Okay, let's start. So that's, before we start, sorry. So this is for you, take a test. It's all, every section has part of it. So you can go here and have questions for that section, okay? To the curious people, how do I do the stuff as administrator? But just a comment. When I go as an administrator, I go to courses, and then I go to business, and I go to this course, same course. I have the ability to change everything. So I have this little menu. So when I go into, let's say, this topic, I can edit online. That's called a content management system. So it looks to you as a one page, but for me, it's really made of pieces. So when I click here, it really is this block. And that's the way I edit online. If you find an error, I will fix it right away as we speak. So feel free, if you're finding any error, I will fix it. By the end of the session, everything will be corrected. No need for sending anything to me or me to you, okay? So, and I can fix everything right online. I'll go to the other browser. So, and now we'll go, what is the requirement of the course? Basically, to write a paper, I will upload it after my second session. And what I will be asking, basically, apply what we learn in this course on one company you choose. Now, I will help you out. Let me go again to the same place, and I will tell you what would be a smart choice that make your life easier. I know you are extremely busy. So make your life easier. When you go to this course, when you click on simulation, this is a simulation that I made for the course, that a little more advanced course, in which you have the whole complete valuation. But there's one thing that's really nice. You can choose, if you don't know which industry, a company you're interested in, you choose all companies, and you click here. The list of over 3,600 companies are here. By the way, 3M is one of my favorites, okay? But you can choose any one. Let's say Amazon. Oh, sorry. Okay, anybody see Amazon? Yeah, here it is. When I click Amazon, okay, when you go to data, you need to fill up other stuff to do the valuation. But when you go to data, it pulls automatically all the data for Amazon, not all the data, most of the data you need for valuation. Certain data is not here for your assignment. So you will need to fill it up by hand. I will try my best to make sure that I will try in 2 or 3 weeks to put all the data you need for any company in here. So I'm just checking how to do it if I will have time. But if you're missing something, you can just take it from Yahoo Finance. Okay, if you go to Yahoo Finance, I allow you to use it. And when, let's say I go to Amazon,
Well, we can also go on Google and it turns
yeah,
out
many
the
sources, all of them are just fine. You go to financials, and in financials, you basically have income statement, balance sheet, and by the way, here, if you go to the balances, you click here, it will give you all the categories, okay? So basically, you can use this one instead of my data that I put here. So this will be very nice because my plan is just time constraint. It's to add another one, another folder here, not for the data, also for ratio analysis, vertical, horizontal, and ratio analysis. So when you click there, basically your assignment is done automatically. Okay? So I would choose a company that I like, industry that I like. And if you can use this one, there's a lot of stuff that, you know, you can take immediately, like price by the end of the last year. And there are other stuff that I added here, okay? And it's really will be a nice exercise for you. You will see that the numbers I report here, they are not always the same as in Yahoo. And then you ask yourself, well, what's going on? Which number is the correct one? Neither of them. And what do I mean by that? This one is as I pulled it from the SEC. That's basically the way the company has filed with the SEC. I use a protocol called XBRL. Let me write it down. Sean loved the XBRL. Did he talk about it? Anybody? You have written a paper or two on
What is that again?
Yeah, I'm going to make it.
I think that he talked about it, yes.
Yeah, he
it's
loved that
information
topic.
that we can download from the internet, yes.
Yeah. Once I walked into his room, right after he finished the class, and I saw XBRL on the blackboard, and I said, oh, thank God, there's another person at least that knows about XBRL and know how important it is. So here is a beautiful example. I pull all the data using a protocol called XBRL. So what he was talking about, extremely important. Strongly recommend for you, just go on Google, introductions to XBRL, just take a glimpse on know what it is and why it's so important. Unfortunately, the SEC allowed many companies to add their own takes in addition to the conventional one, which make it hard to compare between companies. One of the main idea of the XBRL is to make comparison between two companies easier. And unfortunately, by allowing them to use their own titles or takes, it makes the comparisons harder. For example, in here, I have interest expenses reported in this way, but there's other companies, I think Teva or Facebook, I don't recall which one, they don't report interest expense, they report financial expense. And then it really is the same. So by the comparison is broken here. So that's just a comment on what is XBRL and how the data is pulled here. So if you get a data here different than what you're getting in Yahoo, it might be that Yahoo have fixed some data and maybe they just took it from the financial statement themselves. In other words, companies many times prepare a PDF and then they update the SEC with the XBRL protocol, and many times there are differences. Shaw have written a paper right on that topic, okay? So if you find differences between the data, both of them probably wrong, or maybe one of them wrong, but it's beyond your ability to, so just try to, most of the time will not be a big difference, okay? And let's say you find the differences, big differences, just go to the company website, let's say Amazon, annual report, and try to download the annual report itself. So usually companies will have.
We can also use Edgar from the SEC.
Yeah, Edgar, in fact, this is the Edgar, by the way. Edgar reporting all the data using XBRL. So in Edgar, you'll get the same numbers as I do. Edgar is the body that managing all the stuff on behalf of the SEC using XBRL. But this one, it's the way the company actually filed. This is really the report has the accountant have filed, and that goes to their investors. Theoretically, these numbers should be really right. There's no error allowed in this document. So you can always go here and just take the numbers from here. Okay? So to make your life easy, you know, it's after all, it's only 4 sessions, and make you work too much, it really doesn't worth it. More important that you understand the concept. Okay? So your assignment would be eventually, okay, to do I would start from here. To do vertical and horizontal analysis for income statement and balance sheet, ratio analysis, as we study. Basically, you take the report. Let's say this is your balance sheet. This is your income statement. Put here in additional information. Basically, you can take this template. It would be really nice advance to this course is to allow every student a blank page like that, and you will fill up the data of your company, or I pull the data from XBRL directly into here. You will adjust it, and then all the calculation will be done automatically, and I will just ask you to write your explanation. That will come in a year or two, hopefully. But for now, at least, for your assignment, you have one Excel for balance sheet, one Excel for, or one Excel for both of them. So you put them in the same Excel, you put the additional information, and do the ratio analysis. I'm going to cover each ratio and explain the purpose of every ratio in the class. That's for ratio analysis. Same things, by the way, you can use exactly the same Excel doing vertical and horizontal as we study. So really one Excel, it's 80% of your paper. What I would like you is to organize it as a Word document, and you can take a screenshot from the Excel and put in your paper. It's very important for me, the discussion. As I said, in a week or two, I will upload the formal requirements, so everything will be clear. Questions so far?
You mean an example, Professor?
I have examples, yeah, I will upload an example as well, yeah.
Professor?
Yeah.
I have a question, please. Is it by individuals, the assignment, or pairs, or how does it go?
One more time, sorry.
The assignment.
Yeah.
Should we submit it like each one alone, individuals?
Yeah, it's
or?
an individual assignment.
Okay, okay.
Usually, what I used to do an exam and a paper. And then I came to a conclusion, it's not fair for 4 sessions to give so much work. And I turned it totally to a paper. But then, and I think a paper is more appropriate, but it's an introductory class as well. So there is a place to an exam as well. And so I ended up with having a paper. I usually like paper to be written as 2 or 3 students together. I think it's good brainstorming and writing together. It's a nice exercise. The requirement of the department is that it will be individual. So that's why it is individual.
And I have one more question. Is it that each of us is to choose a different company? So once a person has, for instance, taken a company, another person can do his paper on the same one?
No, I will allow you to do the same company.
Okay, thanks.
As long as it's a good one, yeah?
Yeah.
One more question, Yossi here again. In the syllabus, it says 100%. It's regarding the grades. It says the paper is 100%, but attendance is 80%. So something doesn't add up.
Attendance, in order to qualify to get in a grade, you have to have attendance 80%.
Oh, got it. I thought it's part of the grade. Okay,
Yeah,
so the
it's kind
paper
of
is
a little,
100%.
it's a condition. But let me tell you up front, honestly, you miss big time if you won't participate. I never really take attendance. You know, I have a professional Zoom. It takes automatic attendance. I never use it, okay? I don't think we are in a stage, you know, if I have to check your attendance, you shouldn't get accepted to the program. That's my opinion, I'll be honest. And this is for you, the class, you know? If you think you can learn it better without, good for you, okay?
No, absolutely. Thank you for clarifying.
By the way, I will tell a lot of stories during the session. And honestly, if you take this class again next year, you will hear different stories. So that's the way I usually teach those classes. I never really repeat myself, very rarely. I forget my own stories, I'll be honest. So I usually come different stories as we go along. And I hope to hear from you also stories. That's the whole purpose of having academics. You know, I like your question, I'll be honest with you. I don't think there should be any exams. I think I should give you a grade by knowing you during the semester without giving you the paper for you to study, not to really grade you. And my objective is supposed to help you to write a good paper, not in order to give you a grade. Unfortunately, that's not the case. But I think this is the philosophy. I all my life was in that philosophy since I was a kid. I tell a true story. It really is a true story. I studied in the war school in high school. And I wanted to make sure I would pass my Bagrut exams. So I was going to other schools to see which books they are using. And I was going and buying them myself and study with those books in order to make sure I would pass the exams. That's, I think, the philosophy that everybody needs to. So not check on, you can, I had to put it in the syllabus, but I'm not going to enforce it, okay? Good. Next,
when is the assignment due, please? When is the assignment going to be due?
When do you want it to be?
Good question.
I think it'll depend on the other
Sukkot,
in the other courses, which we don't yet know.
Just before Sukkot, is that okay?
Let's do it this way. Take a week, think about it, and tell me this is the best date for us as a class, so it won't affect your other studies. And that will be the date.
Okay.
Fair enough?
Fair enough.
The only condition is that you enjoy writing the paper. That's the only condition I make. If you don't enjoy it, don't do it. Okay, so let's start with the first session. So we got everything out of the way. My name is Amos Baranes. In fact, I'm an economist. My PhD is in economics. I specialized for many years still on merger and acquisitions. I love the topic. I think I enjoyed the most when I analyzed, I did valuation for Teva about 3 or 4 years ago, I already forgot. And I valued Teva and I was amazed that my valuation said that the value is supposed to be negative. That was before Teva collapsed. Anybody who familiar with the stock price of Teva? I think it was 2017, if I recall. I know that it was around February that I did the valuation for my corporate valuation class. It is just for fun. And when Teva collapsed, I didn't believe myself. I didn't really make any money out of the collapse because I didn't really believe my valuation. But it was right. And based on that, I built the simulation that I just showed you, corporate valuation. But the beautiful part that came out of it is that as the value of the stock of Teva was collapsing, it took from Thursday to Monday the following week. That's a hell of a lot of time for price to adjust itself to what it's supposed to be. If you look at the financial statements, what really happened is that I think it was on Wednesday or Thursday morning when Teva announced they're going to show a one-time expense of $6 billion in their income statement as an adjustment of their financial statements. Now that's a very unusual for companies to do. After an effect like that, you do expect a huge decline in the stock price. The only thing is that I thought that Teva was misleading even in that point because I thought the adjustment should be 16 billion, not a 6 billion. And I think one of the reasons why the stock price haven't adjusted immediately, because people were suspicious as I was. And it took from Thursday up to Monday the following to think about it. People had the whole weekend to think about it and react on Monday. And I was shocked to see that the price was still not adjusted. Moreover, I couldn't take my eyes out of the screen following what happened to the options that are derived from the price of the stock. I do not know if you have taken a course in options. Did you have a course in options? That's a must take a course, at least a basic one. Because I think it's really, if there's something beautiful in finance, it's really options, pricing, and what is the idea of option. Futures, it's a different topic. If you study, anything that has to do with commodities, making sure that you're not growing corn and you end up that the price of corn will be zero, almost or very low, and you barely can cover your expense of growing corn. So what will you do? You're exposed to a risk, a weather risk. And you would like to buy an insurance. Can I buy insurance of weather? It sounds ridiculous. But if you ask farmers in Wisconsin, which is the state right above Illinois in the US, everybody in Wisconsin that have a farm, he goes and buy what it knows as a futures, which is really like insurance, that if there won't be enough water, it would be compensated and it would be paid as if he bought an insurance of in his crop. So I think I recommend, for you to take a course, wherever. I hope to write a course myself in Academy City and open it up. It's a beautiful topic. So when Teva's prices collapsed, I was following what the options on the stock. I will say one word about what is an option. You can think about options in the sense that you go into an agreement with your friend, saying to you, playing a game with him or with her. And you said to her, if the stock of Teva will go down by $10, I will pay her $10. One more time. I'm playing a game with my friend, and I say, I think Teva price is going to go up. The stock prices of Teva are going to go up. She said, no, it is going down. So I said to her, you know what? If it is going to go down by $10, I'll pay you one by one $10. If it goes down by $20, I will pay you $20. Fair enough?
Amos, 1 second. Can you let in Fatin? She's in the waiting room.
One more. Yeah, let me check. I tried to, yeah, one more. Thank you.
Welcome.
Yeah.
Thank you.
One more time. You're getting into this kind of a game with your friend. He says something going to go up. I'm saying something going to go up. He says it's going to go down, or vice versa. So let's take the example. I'm saying it's going to go up. She says it's going to go down. So I said to her, I will give you the option. That's why it's called option. And I will make the story short without getting into the detail. So it's a little bit more, has some more element that I'm avoiding, but explaining the content, that if the price will go down by $1, I will pay her $1 because she is certain. If it will go down by $2, I will pay her $2. If it goes down by $100, I will pay her $100. And she said, agree. And I said, okay. She said, what happened if it goes up? I said, you know what? You don't have to pay me anything. And I don't have to pay you anything. One more time. I went into an agreement with my friend. I give her the benefit that if the price of the stock will go down, she will make money. If the price of the stock will go down by $1, she makes $1. If it goes down by $10, she will make $10. Fair enough so far? But she has nothing to lose. If the stock will go up, she's not going to give me anything. Will you get into this agreement if I offer that to you? Anybody?
Yeah, I think why you were so confident. Yeah, I don't think I would.
Definitely. Madeleine, what do you think? Definitely.
Yeah, I don't think. No, I won't.
Why not?
Because it is very obvious. You, from Thursday until Monday, you expected the stock to have crashed at that time, but it didn't. It shows a resistance. It means that definitely it's going to go up. That is the only option. So I will also assess this in that way and then know that definitely it will go up.
Okay. I want to tell you that we are in a full agreement. I don't even get into the argument at all. I just look at the term of the agreement between the two of us. You have nothing to lose, whatever going to happen. I only give you the benefit. If it will go down, I will pay you money. If it goes up, you pay me nothing. So you have nothing to lose. Doesn't matter what will happen. That was the agreement. Is that right?
Yes.
Yeah. I only pay you if it goes down. If it doesn't go down, you don't pay me and I don't pay you. So it's a win-win from your part of the equation.
It sounds a little bit too good to be true because then where's the hook?
Oh, beautiful. So then you say, Amos, why you are so stupid? Why do you give me such a beautiful agreement to somebody that you have only the chance to lose? So Amos is the stupid guy here. If I offer somebody an agreement, which is an option, I will explain what the option means. Why does it call option? You know, no, you know what? I won't get into that because that's a different course. Let's leave it aside. If it goes down, you make money. If it goes up, you don't lose anything. So Amos given a possibility, let's call it, for you to make money. And where is Amos getting compensated? And here is the beauty of it. Why option is very interesting. Amos supposed to charge you something for this possibility. Let's say I was on Thursday and I'm giving you this chance, Thursday evening, and you saw the price already went down and you have some probability that it will continue on Monday. Maybe it will go up, but you don't care about going up because you're not going to lose if it goes up. But you have a chance that it will continue. And in fact, in real life, it did. So if you got into an agreement with Amos on Thursday, and that's have a chance that you make money. So then you say, Amos, I'm willing to compensate you because otherwise you're stupid. You're not going to give me, you lied to me. You're not going to get into that agreement. And by the way, it's not legal. An agreement has to show, and a legal agreement has to show you're giving something for something. You know, it's a contract law. So you're giving something for something. So I'm giving him the chance to make money if the stock price will go down. He has to give me something in return. And the something in return, that's called a premium. That's when you hear somebody pays a premium to buy an option. So he tells me, you know what? The stock of Teva after the collapse was about 28 or 27 on Monday. It went down up to almost 20, later on even below that. And there's a chance it goes down. So he does the calculation. The simple calculation could be, if I said there's a chance of 50% it goes to go down by $10, the expected down, it's $5. You know, 50% of going down by 10, that's $5. So that could have been the premium. But I won't get, this is a pricing of how should I price, how much the person's supposed to pay me. It's a whole field, and I won't get into that. But the beautiful part that I have noticed, watching on the screens of the option, there's many kind of options. I just described one kind, which known as a put. There's also a call, and there's combinations. And I noticed that I could have made so much money buying and selling options in those 2 days if I had a computerized system. And I didn't at the time. So that's why I spent almost a year from that collapse writing a program which is automatic arbitrage trading. So I didn't make money, but I made already $40,000 out of that trading algorithm, which is amazing. It works. And it was not on Teva, it was on another company called Foot Locker. Okay? And that's the beauty of when you really love what you do. So I developed that one. What it has to do with your course, why I'm telling you that story. Because really, why do you do financial statement analysis? You do financial statement analysis to know the company. To know the company, one, know the industry. Know what this company is special in that industry. When I analyzed Teva, I analyzed where do they buy their genetic, where do they produce, what are their competitors. I went to the Constitution of India. You know, in the Constitution of India, Section 4D says that if a drug is vital to the life of too many people, and in India, everything is for too many people, like in China, because the population. So you cannot get renewal of a patent, even if you got it in a different country. And India is part of the TWO. So if you are a partner in the TWO countries, and other country give a patent or renew the patent, you must honor that patent. And many companies, a lot of them, got patents in the US. The Indians did not respect it. And they said, according to our constitution, and it came to the Supreme Court in India, and they ruled that Section 4D, it's prioritized on the agreement with TWL. And now, why is it very important to know? Because Teva is in generic medical. Is Teva is susceptible to shocks from other pharmaceutical companies? Definitely yes. So basically in the last 10 minutes or 15 minutes, what I was doing, just describing what I expect you to do in section 1 of your paper. And your paper, don't jump right to the numbers. Write the first section about their company. Describe the company, describe the industry. You can use SWOT analysis. Most likely you have taken a course that they talked about it. I'm not going to go over it here. Whatever you feel like comfortable, send a message, I really know this company. For example, if you write about Amazon, you know that Amazon today has really 3 heads. One is the conventional Amazon selling product all over the world. The second one is Amazon Web Services, totally different animal. And there's a lot of many little Amazons now, starting from the retail Go store that I went into to so many other elements. Alexa, you know, Alexa, the component, you're putting it in your house, and now it's getting into so many other places. Last week, I was testifying in court about a security system, okay? I'm also a computer scientist. So at that place, I testify as a computer scientist. And that the system does not really perform as it's supposed to. And in fact, they put an assistant inside that camera. And I said to them, guys, why did you build it up? Already Amazon have done it. Or what you had to do is the API connecting for the Alexa, and it would definitely would work. And theirs didn't work, by the way. Okay? So Amazon, it's a huge, giant animal today. So if I want to do evaluation or I want to do financial statement analysis, it would be really won't be right if I don't really know what Amazon is about. If I go to the financial statement and if I don't go into the segment analysis or the segment section in the footnotes of the financial statement, I will miss big time, because I would like to see which segment Amazon is making money and which segment Amazon is not making money. By the way, Amazon is not making any money almost, I think even losing, from the conventional Amazon we know that we're buying merchandise. They're making most of their money from the Amazon Web Services. By the way, economies, but you know, smart people, no, I shouldn't say smart people, but people, knowledgeable people, can really utilize Amazon in a smart way. If we're already talking about it, Academy City is sitting on Amazon Web Services. Let me open it up. Now let me go to the other one.
Professor, can I ask a question?
Sure.
Oh, how about the Appreciation variation? What's the main point?
1 second, sorry, I apologize. My brain is another place. I will be with you in a second. Okay, I promise I will let you ask the question. I just wanted to, if somebody didn't see it, this is the part of Amazon that makes the money. I'm in fact their customer. It's amazing. It's beautiful. In fact, I bought from them a server. So simple. I have only one instance. Okay? But since I'm managing it right, my bill is almost nothing. Let me show you my bill. Let me just find it first. Here we go, my billing. You can see it. I only paid so far for this month is less than $10. It's expected to be less than $13. All my expenses of maintaining Academy City online on a computer handled by Amazon. Is Amazon making money out of me? Is Amazon making money out of me? Anybody?
Yes, sir.
Definitely. Because what is a computer today, by the way? It's nothing, it's a virtual machine. All what I had to do is click a button and the probability, so that maybe cost them a cent to give me these services. By the way, on this machine, I have a virtual machine. I have, in fact, 2 computers. And here we go. If anybody is familiar with virtual, I won't turn it on, so I won't take resources. But basically, here I have operating system of Ubuntu, that if I will operate it, I will have another computer, Linux system. And the reason is because what I have also on Amazon, it's also a Linux. And then when I upload the upgrades, it's automatically, I know it will work perfectly. So not knowing that, I don't really know Amazon. And secondly, this is just really nothing compared to what they're offering. If you look at all their services, they are huge, amazing, a lot of service. This is just the EC2. But they have a lot of stuff, elastic blocks. You can, you just go over it, load balancers. I don't really use it because I don't really need it. And I find my way, honestly, in a way that you don't really need all of that if you know what you're doing. But for a lot of companies, it's extremely important. I have seen companies spending thousands of dollars on Amazon. Honestly, they could have shrunk the cost. I prefer to spend it $12, $13 a month. It's worth for me. But if I want to do financial statement analysis and I don't really know what Amazon is, that will be really a miss. And they're really making most of their money out of the web services. Okay, somebody wanted to ask a question. Go ahead, please. Who was that? Somebody was asking a question. I stopped him.
Minyan.
Yeah, go ahead.
Last question.
Oh, sorry, I didn't get it. I wanted to know what's the main idea or main parts about the appreciation variation. Right now, I just read this book, so I don't get the main idea.
Which book did you get?
Appreciation, future, and that stuff.
Can you show me? Can you turn on the video and show me which book is it? Or is it online? Go ahead. You can put it even on the chat, I think. Let me see. And I will see it's on the chat. Can you guys see the chat? What's the name of the book?
Option, Future, and Others.
Yeah, that's an excellent book by Hall. Is that right? I think University of Toronto. By the way, you don't have to buy it. It has I think the 9th edition. You can download it from the internet, 2017. Excellent book. It's a little hard to read, by the way, but I strongly, if you can handle the reading of that book, it's a wonderful book. And if you love that topic, talk to me.
Video, it's very, very, very good.
It's excellent book. One of the best, if not the best one that I know of. If you love the topics, talk to me. Maybe we can write a course together. Or we'll have a lot of fun.
Oh, thank
you. Okay?
Thank you. I will.
Yeah, you're more than welcome. You see why I'm teaching? Because I'm having a lot of fun. Okay, let's go to our first session. By the way, I haven't taught 3 hours in a row. It seems to me almost impossible. So let me take a pause. What is the framework you would like us so we all be insane when we finish? What do you say?
Every hour, 10 minutes or 15 minutes every hour?
I think at least, okay? What do you say? So every hour we'll take a break. How about that?
It's not a democracy.
I agree.
I even don't mind, I'll be honest with you, but I don't want to sound like I'm kind of cutting corners. I don't really, whoever knows me. If you want, I can split the session to an hour and a half and do another one 3 hours later, but I don't know what your program, so I can't really offer that. I am free anytime, even in the middle of the night. So you tell me, take a week, let me know. Fair enough? So,
fair enough.
Because I think it's really, 3 hours is really heavy in a Zoom way. In a classroom, it's fun. In a Zoom, it's a little harder for the audience. It's a little easier for me. I think it's even easier for me because I'm thinking and I'm interactive, but for you to listen, it's a little hard. So I will try to make it interactive. I will do 10 more minutes and then we'll take a break for 15 minutes. Fair enough?
Okay.
Good. So,
Thank you.
So I can feel that I started the session. So far it was stories. I described what the first part of the assignment. And now let's go what the objective of the session today. I will introduce the framework and then we'll take a break. I click, by the way, after I'm in the financial statement analysis, I go to the first topic. I went to the fourth one, review of financial statements. Close that one. By the way, every case study, it's described in the bottom. So if you look, what is the first case study? Issue shares. So I tell you how is the best way to study this section. You can also see my video that I recorded here, and I'm going to go over it today. Clean up the whole data. You have a button, it says clean data. And it's like you started having a company from scratch. By the way, I don't know if you went through that in accounting, but what does it mean? Anybody wants to help? What does it mean to open a new company? How do you open a company?
Invest with your equity.
You register.
First things you have to do. First things you have to do before everything.
To bring money.
No, that's a third or second.
You
First
go
things
to
you
the
have
accountant and you registered.
First of all, what is a company? When a company is born,
it's a legal entity.
You know, when a company is born, you know, when you have your birth certificate, they will write you were born in that date, da da da. When you get a company certificate, the company was established on, and you got a date. So you have to establish the company. How do you establish a company? And you say, okay, from this today, the company was established. A new entity have been born.
You go.
How do you do it? Why didn't you ask it in accounting? You should.
You register it in Rasham HaChavarot.
Beautiful. You go to the Secretary of State. You go to the internet today. When I established my first company, you go and you get those one page, two-sided page, and you fill it up. All what you had to do there, you write the name of the company, the name of the CEO, Amos Baranes, the name of the secretary, Amos Baranes, the address is my bedroom, okay? And how much money you got, the address of the, you know, the office, it's my bedroom, everything, and then I'm done. And then in the bottom, I figured out that the least franchise tax you have to pay is if you announce that you're going to put equity of $1,000, initial equity. It's really kind of stupid. I don't know if they changed the law by then, since then. If you said that the initial capital is going to be 1,000, you pay, I think, 0.25% of that. That's ended up nothing. So I put that one plus 150 registration fee. You send those papers and you're getting a beautiful, nicely Secretary of State of Illinois, the company by that name. It's established. You take that one to the framing, you frame it nicely. In my case, I put it in my bedroom without a frame. But when I moved to my offices, I moved that one and I framed it, okay? So the way a company is being born is really by establishing or registering it with the Secretary of State. And when you really have a company, how the balance sheet looks like. This is the way the balance sheet looks like, empty. You have no cash. Oh, that's not true. I should really write here 1,000. I have to go and open up a bank account, and I will write in the common stock 1,000. Who is the owner in this case? Is me. This is the balance sheet newly created with an equity of 1,000. How does that look like? I have a cash changed from a 0 to 1,000. Equity have changed from a 0 to 1,000. Hey, I haven't taught you a statement of cash flow, and there's already some number here. And that's why we'll take a break right after this sentence. Statement of cash flow objective is to show how much the cash account of the company have changed. One more time. Statement of cash flow comes to show how much the cash of the company have changed from the beginning of the year to the end of the year. When I see here 1,000, basically this 1,000, it's the difference between 1,000 to a 0. okay? And we definitely go deeper and understand statement of cash flow. So at least we saw what the bottom line in a statement of cash flow. I leave you with a question. Is there a smart things to make a statement showing and change in cash? And after the break, we talk about it. One more time, we have a statement, and the objective is to show if the cash, how much the cash have gone up or down from the beginning of the year. Is that information by itself to know a change in the cash account? Is that an important number for investors? Yes or no? And then we'll talk about a break. So we take 15 minutes. In my, it says here 4 and 2 minutes plus 15, it's 4:20. Does that make sense?
Yes.
Okay, I'm good in mathematics, you see?
Yes, including mom.
Yeah, exactly. Added value taxes.
Thank you.
Okay, so we see
ya.
everybody. I will leave the video going. I will leave it as it is and see you in 4:20. Take a drink and everything you need.
I have a question. The company for assignment, we can choose only based on your site, like the company that is listed there.
I tell you, the only reason I mentioned my site for that to help you out if you need the data, but you can choose any company you like, as long as it's a traded company, otherwise you won't be able to get the data.
Can you show us how you got to this again?
Yeah. One way is to go into in Academy City, let me go close it. I will try really my best to make sure that all the data will be there, but if you don't, you can always go to, I go to courses after I logged in, yeah. I go to business, and when you go, this is where you go to the course material. What you would like is the simulation. By the way, this one and this one is the same simulation. This one takes you to a different application. And here you can just click all companies, and you can just start typing the name of the company you're interested in.
I don't have that simulation option on mine.
Have you registered?
Yes.
Did you click on, let me go back, when you get here, you have this little button. You have to click on it, and then you just click on that one, then it should open up automatically. You should add it up, you refresh your screen.
Oh, okay, I see what I did wrong.
After you click on this one, you are registered for the course, and then when you refresh the screen again,
okay.
it will appear automatically.
I see it now. Thank you. Sorry for the...
No problem. Let me go into my account. I want to make sure, please, after you register, go to your My Account, and in the portfolio, put your info. You know, put your first name, last name. The reason is, then I will open up. I mean, this is really, there's a lot of work still has to be done, but for example, in many places it will be that I will show you your name or whatever, so your colleague many times so when I go to my account is a little different. You know, when after you put your picture, you see your own, but I'm adding a lot of new stuff here. I go to course management, that's mine, you don't really see it. And one of the courses is financial statement analysis, and this is the two courses. This is an Ivory course. This is here. I get the list of all the students. So here I can see this guy or this lady didn't put her first name, last name. Now, other courses, you know, if you take other courses here with me, I assign to groups, and then it's automatically put the groups and you know who is in your group, blah, blah, blah. There's many other features. This is all in mine, you don't see it.
No, I'm saying I don't see my name on your list, which is weird because I put my name.
Maybe it's did you go to your profile?
Yeah, I added my
There's one name missing. There's two people that haven't put their data. And here's a guy that put his name twice, or there's two people.
No, Eddie usually...
I like to register twice.
Yeah, so here we go. I'm going to take one of them out.
He's worth like two of us. That's why.
I've also registered and I don't see my name.
Here we go, it's gone. So I refresh my screen again. Should be gone. Yeah, here we go. There's only one. That's good. And those guys, if you put your name, it will show up. So hopefully that this website will go and go and go, and then you'll join it and take more courses and enjoy life. Anyway, let's go back to our class now. I'm going to go here, and that's what we did. Okay, I just showed how we establish a company, and we put $1,000. I made life easy in the sense that I built case study from the beginning of establishing a company with many scenarios you went over in the class in accounting. And as I go over those cases, I will show how it's affect the balance sheet. I will show how the income statement is changed. And then I will show the statement of cash flow. And that way, I will teach also the statement of cash flow and do a review of the accounting all in one page. Okay, so let's clean the data again and start the same scenario. We issue equity. This time I just put 50. Okay, that means I raised 50,000. You can think about all the numbers in thousands, so it doesn't make a difference. 50, the cash in the bank account of the company. How do you do that? Usually after you get the certificate from the Secretary of State, you go to the bank with that certificate, and on behalf of the company, you open a bank account. In that bank account, you transfer from your own bank account 50, and you move it to the bank account of the company. And in return, the company is supposed to issue you equity, stocks. And really, if you can think about it, what is a stock? Is a piece of paper saying, okay, you have given 50 such and such. Usually it's called par value. It doesn't have to be exactly what you paid, but that I will leave to the accounting class. And let's say in this case, the book value and the market value is the same. I get 50, and on my certificate of the stock certificate, I get, it says $50 shares in company A. Okay, let's call this company Company A. So here we go. I got this piece of paper called a stock. It says on it 50. I gave $50 from my bank account to the bank account of the company. This is the balance sheet of the company. I'm as the stockholders, the only things I have is that piece of paper from the company showing that I am the owner of those stocks. That's first transaction. Let's go, and we know 50 is not enough to do business, and we want to raise more money. And we can take a loan from the bank. So how do we take a loan? We just ask the bank for a loan. If you click on this button, it will add automatically 600 to the debt and 600 to the cash. So I have 650 in my bank account. The source of those two, it's 600 by taking a loan from the bank and 50 from the owner, from the equity owner. Now, there's no effect of those two transactions on the income statement. There's no transactions that I bought or sold, I lost or I made money. So I'm not surprised that there is nothing in the income statement. And what is the statement of cash flow? We said that the bottom line comes to explain how the change in the cash account came about. So here we see, we went from 0 to 650. What are the two sources? One is we took a loan, and one we issued an equity. So here we go. Let's look at the statement of cash flow. Please notice the first one, I will talk about it in a minute. And then there is a second section, and there is a third section. A section that's called financing activities, this part. And financing activities has, first of all, we use two lines. One line is increase in long-term debt. One more time, increase in long-term debt, 600, that makes sense. We did took a loan. So basically what it is, 600, it is the difference between this 600 and the 0. As I said, everything in the statement of cash flow, it is a difference in the balance sheet. So this 600 is here. It's exactly the difference. We had no debt when we opened a company. We had nothing. Everything was 0. So we took a loan. Here is the 600. We raised money from the equity. We have 50. So here we go. 600 debt. Increase in common stock is 50. How the increase in cash came about? Raising money by debt and raising money by equity. Is that clear? Questions before I move on? I need a volunteer to say yes, then I can move on.
Yes.
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 Good, thank you. Okay, let's take the third example. You know, I'm really, all those case studies built on regular stuff that happen in a real company. We're buying an inventory. We're spending 800, but we don't paying for it. We got it for credit. What really that means? We bought inventory, is that right? But we also got a credit from the suppliers. Hey, it's really fun to study accounting without debit and credit, without journals, just looking at the numbers right in front of you. In my opinion, this is the way that I'm a CPA as well, and I have gone through this process of debit and credit, and I never forget how many of us hated that course just because it didn't make any sense. And when you look at that as having assets, and that's what I like about the books that Shaw have recommended in his teaching. I really like that book. It tells you, you have assets, you have liabilities, and you have equity. So if asset goes up, it has to have a matching, or it is a liability, or is that the equity. In this example, the inventory went up to 800, or the cash would go down, or the liability would go up, or the equity would go up. Otherwise, where is that 800 coming the assets? Assets always equal to where the money come from. Is it come as a liability, or is that come from the equity? In this case, we acquired inventory and we didn't pay for it. So we owe the supplier. And now everything is always will match. Now let's go back to the income statement. No change in the income statement. We haven't got a penny from anyone. We didn't sell anything. So statement of income, there's no effect. What about statement of cash flow? Is there any effect? Anybody? Any volunteer? Is there any effect?
It's not affected
you're
the
right.
cash flow.
Exactly. Cash haven't changed. It was the same as before. The 650 came by taking a loan and raising equity. Nothing else has affected the cash. So by taking an inventory up and current liability, the same amount, there is no effect on cash. I'm going to take a small pause and define something that will be very useful in a second. I'm going to define working capital. It's a definition, okay? And the definition is, I will say the accounting definition and the one we're going to use here. It's a small difference. Accountant define working capital as current asset minus current liabilities. Fair enough? That's really working capital. In another word, if I look at our example, what already happened? What is our working capital? Working capital will be current assets, 650 plus 800, it's 1450. So let's write it down. 1450, that's what current assets minus how much current liabilities? Let's go down here. 1400. That will be equal to 50. That's the working capital as defined by accountant. How do we define it as a finance people and for the purpose of statement of cash flow? Let's take the same things. The only difference, slight difference, is not including cash in here. Not including cash. Okay, let me make it bigger. Fair enough. I'm taking current assets, but without the cash, and subtract current liabilities. So in our example, that's supposed to be current assets, not including cash. That will be 800 minus 1400. That will be minus 600. Okay? That's definition. Nothing here is really any, but we will see in a second why it's very important. So let's look at the working capital the way the second definition. If I look at the second definition, before and after, let's maybe write it this way, it will be easier just to see it. And then I can shrink and we'll see the screen as well. Yeah, okay. If we look at here, if we take the cash out, we have inventory of 800 and we have current liability 14. But I would like to do the exercise. By the way, if you notice, I made a little X here. If you click on it, it will take that last transaction out. You bring me back. So if I clean everything, one more time, first one is adding 50, second one 600. And by the way, if you look at here now, the working capital, how much is really the working capital according to the second definition? It is, there is 0 here. Without the cash, I don't have any current assets, nothing. Liabilities, current liabilities is 0. So far, so good. Does that make sense? Why do I have to
Yes.
Excuse me?
I think this is wrong. This is supposed
It's
to
wrong.
be.
It's wrong. It's the current.
800 supposed to be, isn't it?
Yeah, it's 800 only.
Yeah, I noticed that something didn't make sense to me. Okay, we'll do it one more time. Okay? We'll do it step by step. So in the beginning, as of now, total current asset, not including cash, it's 0. So let's do step by step. Current liabilities, before the third transaction, it is 0. Because current liabilities is 0. So 0, the sum of inventory, account receivable, and other current assets, all of them are 0, minus current liability 0. My working capital, it is 0. Okay, what happened after the transaction? Let's look at it one more time. Let's click on this one. So we have inventory 800, current liabilities goes up by 800. Pay attention. Current asset, not including cash, went up by 800. Current liability went up by 800. Common sense, no change in working capital. So let's write it down. 800, that's the current assets. Current liability went up to 800. Therefore, no change in working capital. What a conclusion. Why did I go through all these to say it? What we see is there's no change in working capital. What it has to do with cash, we'll see in a second. Fair enough? So far, if the working capital has no effect, cash haven't changed. And we saw the connections. We didn't really see the exact connection. It's a fact. We had inventory went up, liability went up by 800, working capital didn't change, and really the cash haven't changed either. So this transaction of buying inventory on credit didn't change the working capital as we define it here, and has no effect on cash. Let's move on to the hardest transaction out of all of them. I'll go over that slowly, and that's why I did those X's so you can see it. The transaction here is we're selling part of the inventory. We're selling it for $12.74. okay? We give the customers credit of 7. So how this transaction, you know what I will do? I will clean everything. We'll get back to that again. Let's focus.
What does it mean? What does it mean, credit 7?
Yeah, here I'm going to show. My customer have purchased for me inventory. The total sale was 12,074, but I didn't collect the whole amount. I gave some credit to people that are like account receivable. I gave them on credit. I said, okay, pay in 90 days. Okay? So I gave them 7. So let's look only on this transaction as isolated transaction. Let's click on it. So what do we see? We sold inventory to customers for 1274. That's what this transaction is about. We sold them inventory that cost us 791. That's why we have here reduction in inventory by 791. That's why we have cash goes up, because we sold to people. So we sold the people for 1267. We sold for 1274. They paid in cash 1267, and 7 was credit. So if you add the 7 plus 1267, you get exactly the 1274. What did we sell them? Inventory that cost us 791. Okay, did we make a profit? Yeah, definitely. The difference between this one and this one is our profit. So 483, it is our gross profit. We don't have any other expenses yet, so we call it gross profit. Gross profit is the revenue minus cost of goods sold. It's how much it cost me, the direct cost of what gave me to make that revenue. And in this case, it's the inventory I purchased, and now I'm selling it. I purchased 800, out of which I sold 791. How much profit I made? 1274 minus 791. My gross profit, it's 483 due to the third transaction. That's very nice. That's the effect of income statement. Let's look at the balance sheet and understand the effect of this transaction, the fourth transaction on the balance sheet. On one hand, we got a cash, only 1267 because we gave them 7 credit. Those guys gonna pay me next period, hopefully, yeah? Okay, they're gonna pay me 7 next period. So this is like money in the near future. That's why it's current assets. In addition, the cash went up by 1267. That's what I collected. My inventory went down by 791. Makes sense. I just took out of the warehouse and UofH. How much really? We had 800 before. I had to do 800 minus 791. That's what would be left in the warehouse. But here we're just looking at the effect of this transaction in isolation, okay? So the effect is reducing inventory by 791. Let's look at the balance and the equity. Is there any effect on the liabilities? No, there's nothing in the liabilities. Is there any effect on the equity? Of course. Equity went up by 483. You have learned in accounting that this number supposed to go automatically to retained earning. Is that right? That amount of the profit goes to the retained earning. Now it's very clear why. Because 1267 plus 7 minus the reduction in inventory, it is the profit. And that profit has to be matched and belongs to someone. It belongs to the equity people. So any way you look at that, that's the right way to do it. It has to be the profit, which is really summarizing how much this side of the assets went up. It is, here we go. Cash plus whatever owe me minus the inventory, that's my profit. That belongs to the equity. Therefore, this is like nicely presenting it, and this is really goes directly to here. That's nice. So we see here effect on the balance sheet. One hand, the cash went up, inventory went down, account receivable went up, and equity went up. Not the common stock, retained earning. I will just throw a question in the air, okay? If I had distributed dividend, how does that affect anybody? Say I have a profit of 483. If I distributed 10 as dividend, how does that affect the balance sheet or income statement if you think so? Anybody?
The cash will go down.
Which one?
The cash will go down.
Okay, here we go. Help me out. I will.
Statement of cash flow.
Dividends up.
Statement of cash flow will be
Here we go.
reduced.
Let's go slowly. Let's do the stuff that we know. If the company is paying dividend, their cash will go down. Agree?
Yes.
We paid 10, so the cash will go down by 10. So it will be 57. Is that right?
Yeah.
So it's already not balanced. Here, 473, 483. That means something has to be done here. What do you think?
Retained earnings will go down.
Exactly. That means if you distribute dividend, your retained earning goes down. So what is the definition of retained earning? That will help us to define retained earning in the right way. And if you want, you can write it down. Retained earning is the total profit the company has made since its establishment minus total dividend the company has paid. Okay? Since this company that we have here is only 1 year old, so what is the retained earning? The retained earning should be really total profit 483 minus dividend will give me 473. I think I forced myself. Yeah, okay? So profit is 483. It should have got into here, but something in the pipeline here telling me that if you distribute a dividend, you should take that amount, subtract that amount, and add it to here. But be careful. Be very, very careful. Let me write it down. And let's do it together. I want now the definition of change in retained earning. And that's equal to what? I claim it equal to net profit minus dividend. Fair enough? Everybody agree?
Yeah.
But pay attention, change. In my example, since first year was empty, so when I look at this number, it is really the change as well, because there was no number here. But if I really wanted to do it right, my language should be the difference between 473 to 0, it's equal to the net income minus the dividend of that year. By the way, you see here, wow, nice. You see the simulation knows exactly that it's supposed to show me minus 10. Pretty cool. Okay, so dividend in the statement of cash flow tells me, you know what the effect of dividend on the cash? Cash going down by 10. Yeah, that we know. The cash went down by 10, didn't it? Is that right?
Yeah.
That makes sense, guys. So let's look now at the whole things here and try to make sense only of those two transactions. We made a profit of 483 and we distributed dividend. On one hand, you can think about it the following. You know, what is the 1267? Is that number familiar to you? Looks familiar to me.
The revenue.
You know, let's do it slowly. You know what?
What you received.
Let's do it slowly. Let's go back.
Receivable.
Let's do it slowly. Let me erase everything. Do this transaction one at a time. Let's do this one alone first. I try to make sense because many students get lost. No reason. But when you follow this one, this is really helpful. I have one transaction only that I'm following. I made a sale, but that's not the amount of cash I collected. How much cash did I collect? 1267. That difference shows right in the bottom here. That's the way we define statement of cash flow. How that money came about, how do I break it into two pieces? Okay? I know really this is the cash I collected from customers. If I take 1274 minus 7, that's exactly, yeah, it's exactly 1267. Another way, and it has to do with the working capital, and I didn't waste your time for nothing, because by defining working capital. Another way to look at it, I can show that, in fact, this cash, this change in cash, it's made of what? You can think about it. Really, I have 483 profit. 483, it's a source of profit. That's my cash. Fair enough? Everybody agree? That's 483. It was the source of that 1267. But not really. Part of this profit, I didn't really collect. 7, I didn't collect. So I really should have taken 483 and subtracted by that amount. Moreover, what is the other source of my cash? I sold some inventory. How much was the inventory? 791. Does that make sense? So let's think about it in a totally kind of crazy way, but eventually makes a lot of sense. Let's look at it one more time, okay? In a different way. I have a bank account. I have a bank account. It was 0. Okay, let's go back to this transaction, clean up. Bank account, 0. Everybody agree? We have a transaction. And that transaction raised the cash to 12. I think it was 67, but I will check in a second. That's the bottom line. Let's run this transaction. Yeah, 1267. I'm saying 1267. Here we go. So I'm looking at my notebook in a simple way. Bottom line, my cash went up. How is that happen? And I'm telling you, the reason is I made a profit of 483. It's like somebody just came and gave me that cash. I put it in my bank account. So far, so good? Anybody?
Yes.
Beautiful.
Yes. Yes.
Beautiful. Now, I said to you, you know, you also sold some inventory. How much inventory did you sell? It was 791. You know, you just took some inventory, and that inventory, you gave it to somebody, it gave you, in fact, the total of those two, in fact. You know, how did I get ready to 1274? That was the price that I sold it for. So now think about it as 2 parts. This is what the inventory cost me. This is my profit. But you know what? I don't want to show it this way. I want to show it slightly different. I want to put a -7 here. And in a second, I will explain why. Okay? And the reason I'm doing it, let's do this way, will look better even. Fair enough? What the logic here? I ended up, after this transaction, the fourth one, with $1267 in my bank account. How does that happen? I sold some inventory that was worth $791 to somebody, and he gave me in my hand $1267. That's really what happened. I gave somebody inventory that cost me $791, so my assets went down by $791. And it went up by 1267. Why? Because I also made a profit of 483, but it didn't go up by the whole amount of 483. It's only by the difference because I gave a credit to that customer. So how much I ended up in my hand? My profit and the reduction in inventory. Does that make sense? Anybody wants to repeat what I said? It's really, you know, usually in accounting classes, I like this method because it makes sense to me as a manager, not as an accountant. After all, I'm going to forget all the rules of accounting. But this one makes a lot of sense to me because I love money, like everybody else. Money talks to everybody. What the bottom line of this one? The bottom line of this one is that you made a transaction. What the essence of this transaction? Selling inventory for credit of 7. My inventory that was in my balance sheet, it had 791. So my inventory goes down by 791, but my cash goes up by whatever I got in my hand. And what did I got in my hand? I made a profit of 483, but I didn't get the whole profit in cash. Out of the profit, I gave a credit. So not all the profit, it is in my hand. So that's why I subtract from my profit, I'm subtracting increase in account receivable because my profit in cash is only the difference. My profit plus whatever I gave up the inventory, that's really the cash I received. So that's why the 1267. 1267, it is exactly the inventory, okay, that I gave up plus the profit minus the account receivable. So if I want to summarize it and look at the statement of cash flow, we always start the statement of cash flow with the net profit. But we already know that the net profit, it's not in cash. Because if we give some credit, this one, it's overstating, okay? It is overstating. And now the only thing is we want to understand what is the 784. It says here, increase in working capital. Amazing. It is exactly those two numbers. And let's think about it. What really happened in working capital? Inventory went down by 791, but account receivable went up by 7. What's the change? It's exactly 784. So if I take the profit plus the change in the working capital, I get exactly the change in cash. That's pretty interesting. Pretty cool. You need to go over it like at least 3 times at home. At least, really. Listen to this video at least 3 times. I'm making it easy, but it really isn't. And I'm aware to that. Believe me, I'm aware to that. Go over that several times, back and forth. You're going to be a manager. You don't want to wait for the accountant to give you this information. You really want to fill the numbers. And that's the way you fill the numbers. Let's do it one more time. We want to expand the statement of cash flow. How to change in cash came about. Cash was 0 before this transaction. It comes to be 1267. And very simple. How does that happen? I came to a customer and I told him, take this inventory and give me 1267 in cash. He said, okay. So I put it in my bank account and my inventory went down. But I tell to that guy, listen, you only paid me 1267 and you're going to pay me 2 months from now another 7 because really the price, it is 1274. So he said, fine, no problem. So he gave me 1267 in cash, but I gave him a credit of 7. Well, I'm looking at my inventory. I gave him 791. My warehouse has less inventory. Now, if I add those two numbers together, what really happened? Inventory and account receivables, they are part of the assets in the definition of working capital. How much they went down? That went down by exactly 784. So I'm looking at here 784. This one goes down. I have the profit here of 483, must match the 1267, otherwise it's not a balance sheet. One more time. This is the balance sheet. The customer gave me 1267. On the other side, I'm putting 483. What must be the difference between those two numbers? Must be the change in working capital. One more way to look at it. One more time. Cash went up by 1267. My profit went up by 483. What's the difference between this number and this number? Must be working capital. So that's two numbers. There's no change in the current liabilities in this transaction, but this is really exactly the change in the working capital. One more way to look at it. Okay, so play with it, play with it. It's really nice. Do it one more time over and over. You can play with it, take it down, put it back, and try to figure out why, and then you see the effect of the statement of cash flow of only these transactions. Now let's do the whole things one more time. I'm clicking everything. Going into issuing equity, we already know, issuing debt, we bought an inventory, and we're adding this one. Now we're having something, like a business that already have done something. Let's look at the whole things together. 483, it's exactly my profit. So this number always goes here. 483 goes always here. This number always goes to here, minus dividend, but there was no dividend. So that number went right to here. Second, the first two transactions, we raised money. We raised money as debt, we raise money as equity. Here we go, raise money as debt, raise money as equity. Beautiful. What else we did? We bought inventory and we sold it. We got a credit from the supplier, we still owe him, we still owe that guy money, but part of the 800, we just took that money, that inventory, we sold it to somebody else. Now think about it. See how the cash went up. Why the cash went up? Because we got a credit from the supplier and we really sold it to somebody else. And that guys gave us cash. So that's why we have a lot of cash in our bank account. Later on, we definitely will have to pay the supplier. So if we want, the supplier is not going to wait forever, he's expecting to be paid. So if I look at this company, while they have a big loan from the supplier really, but they have a lot of cash, so that's not bad. They will be able to pay it, okay? Now let's look at it here. What the statement of cash flow telling us? Oh, this company is a really good one. They're making money, 483. Oh, this is a source of cash. Okay, how the cash came about? Well, we have several sources. One of them, it's the profit. Second, it's the decline in the cash flow and the working capital. Working capital went down by 748. That's why we have 1267. So 1267 out of this number came from operation. I sold inventory. Some of my inventory went out and I made a profit. That's why we call it cash from operation. We made a profit. We decreased some of the working capital. That was a source of cash. 1267 added up to this number. Hey, what the difference between this one and this one? Hey, we already know. That's come from financing activities. We raised money when we opened the company. We raised money as debt and as an equity. Together, the money we raised plus whatever we did from operation together made the cash 1917. No surprise, that's exactly the numbers right here. But we really understand what's really happening in this company after those 4 transactions. Let's take a pause and get questions from you guys. Questions? Is that clear?
Could you please explain again about cash and inventory? We had minus 7 something, 791 years, and now it's only 9.
Exactly. So where the difference come from? If you notice, on one hand, the inventory went down by 791, but on the other hand, we gave credit to supply to customers. So this 784, it's exactly the difference between 791 and the 7. So on one hand, you really should have gotten 791, but you didn't really got all the 791. 7, you gave a credit.
So we raised cash when still don't understand. It's like inventory, sorry. It's something that we
If inventory goes down, let me give you another example. I love your question. I got it. Let me try to help you out, okay? Let's clean up everything. If inventory, the only things happen, I sold to somebody inventory that cost me $791. I sold it to him for $791. That means he gave me cash for $791. Is that right?
Yes.
My inventory will go down. You agree? Okay.
Yes.
How about the income statement will look like? 791
yes.
minus 791. That's a transaction that I'm selling inventory, no profit. Agree?
Yes.
That's why I made this, that you can plug numbers in addition to case studies, so you can test yourself. So let's look at what's really happening here. Is there any effect on the equity? No, there's no effect. No profit. Is there any effect on anything? No. The only thing is inventory turned into cash. What about the income statement? Well, income statement revenue equal to expense, no profit. No profit, there is no source of cash. Do we agree?
Yes.
Oh, but what is the source? I turn inventory into cash. That's why we have 791 here. Does that make sense now?
Yes.
Now we understand why 791, it's very important. It's exactly the decline in the inventory. Now let's push it a little bit now. Same example, but this time I told the customer, you know what? I know you don't have money. Don't give me the whole amount. Give me only 500. So he owes me, how much does he owe me? 291.
Yes.
Is that right? Because that's what he owes me. I'm not giving it to him for free, but I'm just telling him, I know you don't really have money, pay me later on. So what's happening now exactly? How much cash do I have now? In my bank account, only 500. And how that cash come about? It's really declining in inventory, but if I take only the 791, that's not be correct. I really have to take into account the fact that I gave a credit. So the difference between those two will affect the cash that I generated. That's pretty cool. Does that make sense?
Yes.
That's good. Okay, so let's go back and continue with our example. I'm going to clean up and I'm going to click all of those guys and get to the same point. By the way, here it's already this company already have done something. Now I'm going to do one more transaction. I'm going to do payment to suppliers. Anybody wants to tell me what should be the effect? I'm going to pay the supplier $768. I owe them how much? I owe them 100, is that right? What will happen if I pay supplier 768? Which two numbers has to change?
The cost and the liability.
Very good. So my cash has to go down by that amount. Is that right? And in addition, suppliers by the same amount. Is the balance will be continued the same? Yeah, definitely. Because I'm reducing the cash and I'm reducing the liability. So let's do it. So I'm going to click on this one and see what happens. Yeah, this is one down. Okay. And this went down. Beautiful. Is anything happening to the income statement? No, no change on the income statement. It's just payment. Payment is my cash goes down, my liability, short-term liability goes down. No effect on income statement. Is there any change in the cash? Definitely. Cash definitely changed. So in the statement of cash flow, there is different number here. So where is that payment came about? Anybody wants to guess? See, the inventory, the net profit didn't change, exactly the same number. Raising the money is the same things, nothing changed here. Nothing changed here. We didn't even talk about that one. We're going to talk about it in a second. But what really happened here? Think about it. What really happened now after the payment to the supplier?
First, the current liabilities go down, so it's the working capital will go down.
Exactly. So you can sum up and you say, you know, before you had more cash because you didn't pay the supplier. Now that you paid, you have less cash. And you can summarize that by looking at what happened in the working capital. This change went down by the payment to the suppliers. Let's do it one more time. Let's delete this. I have 784 here, change in working capital. And was correctly said by Tang, was really correct. This number goes down by the amount of pay suppliers, because in the definition of working capital, the suppliers, it's a current liabilities. Paying the suppliers, it is really a reduction in cash. And I can see it's on the other side of the coin, it's really looking the change in the working capital. So if I click this one again, pay suppliers, this number goes down by exactly that number. Nothing else changed. That's really nice. Let's go over that at least 3 times at home. After you watch my video, watch it 3 times. Nothing will happen. It's really worth it. By the way, I'm really summarizing all your accounting course plus a new knowledge of, this is usually take 2 sessions to teach. We don't have 2 sessions, but we have a good tool to learn it in a faster way. Okay? Good. Let's move on. We want to go into buying property, plant, and equipment, 400, that investment. What is it supposed to affect the balance sheet? Anybody? How buying equipment going, by the way, I'm paying in cash.
To reduce cash. To
Reduce
cash.
By how much?
Reduce cash by 400.
Beautiful. So cash will go down by 400, and what?
And long-term assets, properties, and plants will be increased by 400.
Beautiful. Is there going to be any change here? In the liabilities?
No.
Any change in the equity?
No.
Nothing.
Any change in the income statement?
No.
Now let's see and observe what change going to be in the statement of cash flow. Remind you, statement of cash flow, it's a change between 2 balances. Balance sheets in the end of the period and the beginning. I'm going to see here going down, so that's one going to affect the bottom line. And then I'm going to see this one going from 0 to 400. It has to have an effect here. So let's look at it. Let's click this one. I clicked on it, and as was said correctly, equity went up, property, plant, and equipment went up, and cash cash went down by 400. How is that affecting the statement of cash flow? First of all, the bottom line went down. So that's one thing. But how did it go down?
By
I
investment.
used some money, 400, to buy property, plant, and equipment. So nothing else changed beside the fact that now I will have less cash. And why do I have less cash? Because I use some of the cash to buy capital assets or capital expenditure. This 400, when it's in a minus, that tells me the assets went up, property, plant, and equipment went up by 400. That's really using the money. We used some of the money that we had in the bank account, and we bought some buildings, some equipment, and that's the way we got it. Does that make sense, guys? Okay, so now finally I can describe the statement of cash flow. The other one will be just more detailed. They're not really that hard, okay? They're really very easy. Whatever left, it's the easy part. The hardest part we already have done. And this is really the transaction 4 is very hard, and transaction 4 is the hardest. It's the peak of the hardness. Everything else now, it's really easy. Let's look at the statement of cash flow. Number 1, statement of cash flow came to show how the cash have changed from the beginning of the year to the end of the year. 2, the whole account, all the accounts here are always the differences of all the other accounts from the beginning of the year to the end of the year. And let's see, is that correct or not? And you will see yes. 483 minus 0, it's exactly the profit. Okay? Working capital 16 include what? 9 plus 7, that's an increase, so let's add up those numbers. I have 9 plus, be careful on the sign in a second. And then what happened to the current liabilities? 32. So let's put here parentheses. Is that correct? Everybody agree? Now, if I take this one plus this one minus 32, I get minus 16. What does it really mean? That I got a loan from somebody, it's a supplier of 32, and I didn't put the whole 32 in my bank account. I used part of it to inventory of 9, and some I gave credit to customer. So bottom line, how much went to my bank account was exactly 16. Does that make sense? That's pretty cool. You just have to go over that a million times until you get to your brain. Accounting is the easiest professional. It's just annoying. And you just take the annoying by repetition. That's the medicine when you get something boring, annoying, but very important. So you just repeat over and over. Basically, all accounting is one equation, plus and minus. They barely have any multiplication with the taxes. They multiply by some number. That's all the mathematics you need in accounting. But the brain, for some reason, always kind of confuse you. When you move something to the right side in mathematics, it's so easy. When you move something in accounting, it's really confusing the brain. And the only medicine for that is repetition. And that's it. And after you repeat it several times, it becomes to be so simple. First time it doesn't. So anyway, so we want to explain the 749. So we have here 97 minus 32. So we have 32 minus this 16. That's contributed the 16. This is exactly that 16. In addition, we have a profit, 483. That's added to the cash. Here is the 483. In addition, hold a second. You raised money, 650. Here they are, 650. But not all of that goes to the cash because you use some of the money to buy some equity, plant, and equipment. So here we go. It's very simple. I have a profit. Some of the money I used to have 16. I got more source by getting loan from the suppliers minus whatever I use for working capital. In this case, inventory and loan to customers. Total, it's gave me 499 from operation. I also raised money as a loan and as equity, part of which I used to develop the company, increasing the size of the company because I invested in the company. I invested in long-term assets. So the difference between this source of money and this source of money gives me the change in my cash. That's it. Very simple. Now the rest is so easy. Now you guys are going to talk. And then I'm going to spend another 10 minutes and send you home. Okay? This time, now it's 5:18. Plus 10 minutes is exactly 5:30. Okay? So we'll do 10 more minutes, and because your brain going to explode anyway. So, and then you're going to repeat it at home. And if you have any questions, please contact me. If you need extra session, I'll be more than happy to go over anything you want. But this becomes to be really easy. We're paying interest. Let's click on this one. Let's see what happened. When a company paying interest, bottom line, my cash from my bank account going to go down. What is going to go down? My profit going to go down. So less cash here. Because of payment of interest, it really is less profit and less cash left. So let's click on it. Pay interest. Yeah, that's right. I have less cash. That is an expense. It's reduced the profit, and the profit is lower. And how does it affect the statement of cash flow? Same things. Okay? Now the profit is lower. If its profit is lower by 130, definitely my cash goes down by 130. So that's an easy transaction. Let's do the next one. Very similar. Now, this one, in fact, number 8, it's really similar to 6. What did we do in 6? We bought some machinery or something. Here, we're investing in another company. Bottom line, what does it mean to invest in a company? You give somebody money, and he gives his shares in that subsidiary. One more time. What does it mean to buy another company? We're buying another company simply by giving them, the owner of that company, we give them money, and they gave us their shares. What do we do with those shares? The CFO, the Chief Financial Officer, put it in his table, in his drawer. And that's reflect that we own the other company. So that's like an asset. So no surprise, if I click here, I should see subsidiaries goes up by 300 and the cash will go down by 300. Very similar to the 400. When I bought machinery, that went up 400, the cash went down by 400. Now I'm buying subsidiary, it's exactly like this is gonna go up and this is gonna go down. Let's do it. I click that, oh yeah, nice. That went down and that went up. What's the effect of it on the statement of cash flow? That's now we know already, same similar effect as the 400. How do we get the 700? It's the 300 plus the 400. We generated cash, we raised cash, we used out of all that cash, 700 to invest in some assets for the company. How much the cash went up from the beginning to the end, it's the difference. So always the cash change by the difference of how much money we generated, how much money we raised, and the difference to the whatever we invested, that will be the increase in the cash. Let's do one more. Invest in intangible. What does it mean invest in intangible? I'm buying a patent for somebody. It's just like buying machinery. So the effect will be exactly the same. So let's do it. I click on this one, 120. Yeah, cash went down by 120. Here we go. Intangible went up 120. No surprise. 820. How did we get the 820? 400, 300, 120. You add them up. It's exactly 820. The cash went down by another 120. No surprise. This number goes right to here. This one didn't change. That had no effect on the income statement. This number goes directly to here. This number goes directly to here. Cool. Let's go one more. Sales and marketing expenses. Anybody? That's similar to what? What other transaction we did that would have very similar effect? How about transaction number 7? Pay interest. We got loan from the bank. We're paying the money to the bank. It's really like, we have to give something out of our profit to those people. When we spend on marketing, we're spending on to generate the income, so it will reduce our profit. So the same things. The cash will go down by the same amount, and our profit will go down by the same amount. Let's try it. No surprise, our profit goes down by the 110. That shows here, sales and marketing. minus 110, reduce our profit by 110. Therefore, our equity will go down by 110. That's why the cash went down. The cash went down by 110, profit went down by 110, balance sheet is balanced, okay? Net income goes down by 110. Therefore, the operation, the cash from operation went down by another 110. And therefore, the cash goes up by less, 110. Let's move on. Some things, transaction 10 and 11 are exactly the same transaction. This is just another 75. It will go right into general and administrative. So let's click on it. Another 75 less. So general and administrative, here we go, 75 less. My profit went down even further. My cash went down because my profit was down. We want to look at the statement of cash flow. 14 is exactly the same number. Well, why did it go down by 75? Because that number went down by 75. No surprise. This number 11, number 10 has exactly the same effect as paying interest number 7. Okay, very, very simple. Let's move on. And we have two more, which are really easy. Invest in commercial paper. By the way, what does it really mean? That means you have extra cash and you don't really want to leave it alone and you want to make maybe some little profit. So you might go and buy government bonds that give you secure interest, and usually government bonds, their value doesn't go down. It's very liquid. If I need the cash, I can sell them right away. And I just make a little money because, you know, if the 14 was 14 billion and there are companies with 14 billion, you're not leaving 14 billion in your bank account. You invest in government bonds at least, because you don't really know if you would need it. So basically, number 12 says, I'm going to use some of this money and invest them in another asset. So that's going to go down and that's going to go up. So that's really transaction number 12. Let's click on it. And number 12, exactly, that went down by 6 and that went up by 6. How does it affect? Does it affect the statement of cash flow? It's supposed to affect, doesn't it? It's affected it by reducing this number by 6 because we know the cash went down by 6. And what is the effect, by the way? That's a homework. A hint, it's in this part. Okay, so number 12, it's a very easy transaction. The cash goes down because we took the cash and we put it in commercial paper. Commercial paper, it's other current assets. And a hint for the homework, other current asset, it's part of current asset. It's part of working capital. And we know what does it do to the section of operation in the statement of cash flow. Last transaction, and that's an accounting transaction. And the reason I put it there, because if I put it in exam, there's no exam, but if I ask in the exam, will transaction number 13 will have any effect on the cash? The answer should be immediately no effect. One more time. The end of the year, the accountant looked at the books and said, oh, we have assets. There's depreciation on those assets. We have to account for it. So what is the journal entry that they taught you in accounting, which I don't really like? They tell you depreciation goes up and accumulated depreciation goes up. So accumulated depreciation will be right in here in the balance sheet, and depreciation will be in the income statement. But you already know, since it's an accounting transaction, you will not have any effect on cash. And let's see if I'm right. And let's try to understand, because that would conclude the session. Here we go. I clicked on that. Yeah, here we go. Where is depreciation? Here we go. Minus 40. Reduce the net income. Oh, depreciation here, reduce the net income. What happened on the asset side? It's an accumulated depreciation. It's reduced also the asset. No surprise. It's balanced. Did it change the cash? No, it didn't have any effect on cash. Did it affect anything in the statement of cash flow? Definitely yes. It did affect the operation by 40, and it's affected the investment by 40. You add up those two, they cancel out. Therefore, there is no effect on change in cash. That's pretty cool. But that's a hell of a lot of information for one session, okay? Why don't we do that? Please go over, I will upload the video, I will edit my video, I will upload it, and you have everything also in the bottom of this session. Every transaction is described. All the transactions. Here I added something as dividend, but I didn't put a button, okay? So you can just see what the effect of it. But everything is here. In addition, you have my previous recording of exactly the same things that I taught you. Please go over it. Next session, I will review the whole things quickly, okay? I think you need one more time. Am I right, Elena?
Actually, I'm okay with that because the only question wasn't answered. But
No,
I would be glad.
I think it's too much in one session. Even my brain is exploding. Am I right, Julia? It's too much. But
you're right, it's too much.
I'll be honest with you, the key point is repetition. Just go over it one more time. And then when you do a transaction, see the beautiful part is you want to focus only on this transaction, click on this one only. And you can see the effect only of this transaction. If you're tired of clicking, you want all of them done immediately together, bingo, you got the whole things. So this button gives you all the transactions as they are. And here, it's clean up everything. You want to know specific transaction, you do that. If you don't, you want to clean and do all of them. And you want to see only the effect of this one. You want to remove it, you can remove the effect of this one. Do it. You know, this is a good game. You click, 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 click until your brain absorbs it. Okay? Because you really have, you know, I want to add this transaction here. You add it up. Okay. Now, what was before? Take it out. You want to see again? Click it again. That's pretty cool. Okay, so play with it. Do it over and over. And next time I will dedicate whatever you guys need time, even reviewing. We learn a statement of cash flow as we reviewed everything you study almost in accounting. So we really have achieved a hell of a lot today. So thank you guys. Questions, I'm available. I will leave the recording open. Anybody want to depart? You're more than welcome, but I will be here for the next few minutes as long as you guys want me.
Professor, just one question. This tool is an Excel embedded or?
No.
Yeah, okay.
I'm a professional.
Oh.
I claim that Excel is history because of this. This is built also in the right way. By the way, when you're clicking here, it doesn't go to the server. Everything is as a client side. It's only download the page one time. And since all those clicks, I don't really need the server, so it's using JavaScript as a client-side program. And then in future, you know, I will add a button so you as a student, you did only half and you want to come back, you will keep the state on the server. That's the only things you would keep on the server. I haven't done that yet. In addition, when you click here, clear, and you click on that one, it's done in the right way. What do I mean by done in the right way? It really goes over each one of them and activate them. So if I add another transaction, I don't need to change this function. He already knows how to do it. That's pretty cool. It's a hell of a lot of work, but it's a lot of fun as well. Just to finish, I can show you how is it built behind the screen. I built a component, and that component was written in Java, in Python, sorry, embedding JavaScript inside it. So see, here I have the, if I click here, I get the programming, the CMS. So when I click here, you can tell The first one, it's my own component that I made. So basically, if I want to remove this one from here, all what I have to do is go here and delete it. Don't be afraid. I'll put it back. It's gone. See? If I do publish, you go now into Academy City, it's gone. If I want to put it back, I just edit here. That's pretty cool. And I go here and I click plus, and which one I wanted, financial statement analysis. I do save. You put it in the bottom. So since I want it on the top, I just drag it here, and here it is. That's pretty cool. What do you think?
Excellent.
Love to study computer science, don't you think so?
It's brilliant.
That's pretty cool. That makes, honestly, I never taught this session as I taught it the last 2 times with you guys and with the guys from Ivory Coast. There is no way I can do the session in this high quality without this component. And you tell me, I would love to hear any comment you guys have to say.
Mr. Amos?
Yeah.
I have 2 questions.
Can you start with the second one?
Yeah, sure.
But then it will become to be the first one.
Well, they are connected in a way. I noticed
I'm
that.
just kidding.
I noticed that your website does not have terms and conditions, and I'm only asking humbly, this is a BI platform. Does our information are kept private?
Definitely. Not only that, even if I have an access to the database, I cannot view your password. I cannot view anything. Nobody can go into your account. No one, even I.
All right. That's only my
by
question.
the way, you know, let me tell you, I have a software company in Chicago since 1994. My first application, I didn't really know anything, so I'm an economist. So I was writing a program for diamond dealers. And you know, diamond dealers are very careful about their customers, about their money, about everything. And I really didn't know anything, and I just wrote everything, and I didn't think about anything. And then after 2 years, I rewrote the whole system from scratch, spending over 1.5 years only taking care of security, customer support, all the upgrade automated. Don't forget, there wasn't the age of internet yet. And then I started writing the application. Some things I did here. I spent over 2 years building the framework of Academy City, and only the last year I started building the content. Less than a year, I think it's about 6 months.
It seems very interesting platform, to be honest with you, and has great potential.
Thank you, thank you. And my dream is to see my student surpassing me. That will make me very happy.
One day.
Yeah, why not? Definitely.
One day. We are, at least we are on the right track. I also have background in computer science, and I'm an economist.
Oh, wonderful. So we'll talk. Take the advantage and we'll talk.
For sure.
Yeah.
Thank you very much.
Thank you, guys. Anybody else? Now feel free, send me email. You want to set up even a small session together. The Zoom is always available. You can try me even 3 o'clock in the morning. You will find out that I'm awake.
Okay, thank you.
Have a good one.
Thank you so much.
Thank you, guys.
Thank you.
Thank you very much.
Bye.
Bye-bye. Have a good weekend.
Lecture. Bye-bye.
Bye, guys.